have done my job.
Our topic for today. Okay, sorry. Our topic for today is a cyber insurance, investigating the next big crossover topic in cybersecurity. And our speaker is Rodney Hood Adriko. And Rodney is a manager IT security at Centenary Bank with over 6 years experience as a technology and cybersecurity professional, with experience both in consulting and also industry practice. He's a Chevening scholar currently pursuing an MSc in cybersecurity from the University of Kent in the United Kingdom. In addition, he holds a bachelor's degree in information technology, where he got a first-class honors from Makerere University and a University Convocation Award for achieving the highest CGPA at the university's 65th graduation ceremony in 2015. Rodney is a member of the Information Security and Control Association, ISACA, and the International Information Security Certification Consortium, and also holds the certifications of CISSP, CISA, CRISC, CH, AWS Certified Practitioner, CCNA, and CompTIA Security Plus. Rodney, you're welcome to this ISACA CPD. Maybe just before I hand over the floor, we could just go through a few housekeeping rules during this session. Well, our mics are all muted, yeah, so we'll just have it like that. And all the questions can be posted in the chat for the presenter to be able to answer them at the end of his presentation. Without further ado, Rodney, please take us away. Thank you.
Okay, thank you so much, Emily, for that. And I'm surprised that I'm actually your manager and you still don't know my title. I'm not manager IT security. I'm manager IT audit, just to make that clear. Okay, members, I welcome you, and I thank you all for making it for this engagement. And very important and very paramount that we keep time. And I thank all those that have been able to make it on time and come on this this engagement on time. So really, without having so much discussion and so much other issues around, I think as Emily has presented, we're going to look at cyber insurance. We're just trying to get an understanding of what we are calling the next big crossover topic in cybersecurity, and we shall get throughout the purpose and throughout the engagement of this session, get to understand why we're actually calling it the next big crossover topic in cybersecurity. Very briefly, I'll not waste time here. A lot has been said. Yeah, Chevening scholar, I'm pursuing a Master of Cybersecurity at the University of Kent in the UK. And it's one of the, you could say, positive outcomes of COVID, that a master's course that was initially that requires you to be at the uni has been given the online option, because universities have been given the leeway to have students coming from wherever they are and only invite students back to the uni as and when they feel that the environment is now secure for us to go back to face-to-face learning. So it's one of the positives that has come out of COVID, that we have the ability to study a full master's course that's supposed to be physical, to do it virtual and only be present as and when needed. My socials are there. That's LinkedIn, and that is Twitter for those who want to engage with me at a less, I could say, lesser professional setting. You can just reach out to me on those platforms. Okay, I'll not really have so much in terms of what we expect to cover, but This is more or less like it. We shall have a very brief overview, and we shall look at a trend analysis. Then we shall look at growth and uptake. Then how cyber insurance works. Then look at a few success stories and a few challenges to the uptake of cyber insurance. Again, very important, my get out of jail card is that what is down there. This presentation was prepared by myself in my personal capacity as Rodney, and the views expressed in this presentation are mine and mine alone, and don't reflect the views of Her Majesty the Queen's government, of Chevening, of my employer, Centenary Bank. Okay, so just quickly for us to get an overview, just for us to sort of try to understand and sort of try to build context on what exactly is cyber insurance. Ideally, insurance has been around for some time, what someone will call traditional insurance. It's been around for some time, and people have been really having an uptake in that particular insurance model. But now with the growth of attacks, of cyber attacks, with growth of a lot of cyber risk, we are seeing a lot of movement in the direction of cyber insurance and trying to cover and trying to allow us to be able to cover our backs from a cyber insurance perspective and what could come out of cyber attacks. What is cyber insurance anyway? Someone asks. If you look at the first definition, and that is by the Association of British Insurers, it's insurance that covers losses relating to damage to or loss of information from IT systems and networks. And that is, it's really a broad definition of cyber insurance, and it covers ideally what you expect to cover because it's looking at losses relating to damage to or loss of information from IT systems. That is primarily what cyber insurance is involved with. If you look at the definition from some two researchers in there, Baum and Schwartz, again, it's more or less points the same direction to insurance that involves the transfer of financial risk associated with network and computer incidents to a third party. And in this particular case, the third party is the insurance service provider who will be providing the insurance service. Finally, by one, it is ENISA, that's a bunch of European researchers that cover various topics in information security and in information systems. They say the insurance contracts having the purpose of covering a broad range of issues relating to risks in cyberspace. Risks in cyberspace is also very, very broad, and it's a very broad understanding of cyber risk. Ideally, that is what cyber insurance should cover. So if you look at all these three definitions, they point to the aspect of looking at loss that could happen when a cyber risk, what we would say cyber risk materializes, and what then happens after, because there are quite a number of things that can happen, quite a number of things that can go wrong. Incident response can be a problem, communication can be a problem, and quite a number of other things can fail when a cyber attack materializes. And that is then why we need to have aspects and have discussions, especially around issues pertaining to cyber insurance. So in terms of the trends and how the movement has been in this space, just give me a second. I'll just try to get a pointer for us to see that. Tools. Okay, looks like I don't have it on this one, but that's fine. So yes, we're looking at trends. So we're saying business across all sectors are beginning to recognize the importance of cyber insurance in today's increasingly complex and highly risk digital landscape. And why we say that is if you look at how technology has been and how work has been even before we're in the situation we are in now, even before COVID came into the picture, we were having a lot of movement towards digitization of processes, of business processes, of work. But now that even now, with COVID on board, we are seeing a lot of movement in the direction of remote working. We're seeing a lot of movement in the direction of bring your own device. So there's really an increase in the complexity of how organizations relate to technology, and technology is starting virtually everything organizations stand for. So there's really a very high uptake, you'd say, of technology. But again, in turn, we are seeing that many insurers and reinsurers are looking to take advantage of that, because it's really a rare opportunity, you'd say, because more than ever, we're seeing a lot of uptake in terms of people going in and people really going and investing into technology. And that really opens a very huge can of worms. And again, from a cyber perspective, we could say it increases the attack surface. So we need to be able to again manage that risk, and that's where then insurers come in. But also later on in the presentation, we shall see that this may be a positive or a negative for insurers as well. But we shall get to see that. But ideally, from the general perspective, it is being seen as a very huge opportunity that insurers should take opportunity of to be able to grow, you could say, the sector and to grow the market. Some interesting statistics there. The PwC CEO survey of 2021 says that 91% of CEOs are more concerned than ever about cybersecurity threats and vulnerabilities. And this is up to, that's from 80% last year. That's an increase of about 11%. So we are seeing a lot of growth in terms of the concern of people, of the C-suite in aspects that pertain to cybersecurity. And we are saying that it's now becoming an area of interest in terms of areas that are of key importance to them. And if you look at that survey, and there will be a link in the references, you see that cyber has now become the #1 issue for board members. Moving on, there is a report by IBM in terms of the cost of a data breach. According to IBM, the average cost of a data breach is about $3.8 million. That's quite a large number. And if you look at companies that on average, for an average company, it's a very huge number. But if you look at other companies that probably post revenue and post incomes greater than this may be a small number. But such companies are a small margin, really a small proportion of entirely what is in the market. And then there is research by Advisor. They're looking at cyber insurance and they're trying to look at the market's view. And one of the key hindrances to adoption of cyber insurance was in terms of the understanding, from a sensitization perspective, the understanding of people and of companies about what cyber insurance is really about. It's a very, very big topic, but that has been one of the blocking items in terms of the growth of cyber insurance. But if you can see that according to this particular research that was done by Advisen, which is a consultancy, but they also do aspects pertaining to cyber risk and cyber insurance, understanding has improved because 51% of the people that was surveyed in that research say that the obstacle of what you would say of non-sensitization was previously 63, but now there's an improvement that now people feel that they are getting more knowledge, and that obstacle has now reduced from 63 to 51%. But again, that shows that there's quite really some positive information that is going out there, and quite some understanding and some sensitization about cyber insurance. And that's why we're having this session anyway. Because if I remember when I started having discussions around the Internet of Things back in I think should have been 2015, 2016, it was something new, and there was no appreciation for it at the time, and especially in our market, in the Ugandan market. But now we're seeing people gradually appreciating it and trying to come to terms with the fact that IoT is with us, and we just need to be able to use these devices. We're talking of flat TVs, talking of smart TVs, talking of smart fridges, talking of home systems, quite a number of things that have been covered. So at the time, it was really an issue that was not so much into the discussion, but it's now coming to the big picture and the discussion that we need to have. And the same applies to concepts of cyber insurance. There's really been growth in that space in terms of what we expect to achieve, but it's something that we need to bring on board now for people to have an understanding and appreciate what it's really about and what it brings on board. This is a quote from CRISC, who is PwC UK's lead cybersecurity partner. And he says, the stakes are so much higher than they were 12 months ago. Businesses have become more aware of how resilient, how reliant on technology they are for their survival. The point that's trying to be communicated here is that there's been, as I had said earlier, an appreciation of the reliance on technology to achieve business objectives and to achieve business outcomes. So again, it brings a new risk vector, a new threat vector, and the risk of cyber attacks really becomes really of very, very high importance, especially on CEOs' minds. And if you go to the first survey that we looked at and looked at that number of people who are becoming increasingly worried about cyber attacks. And if you've also had discussions around whether they are local or international boards, whether they're local firms, there's again a lot of discussion, a lot of appreciation of cyber attacks, and there has to be a way to for us to be able to mitigate that. To make it simple, of course, there are a lot of technical controls that are applied in place. But again, as the discussion always goes, is that it's not an issue of it's not an issue of whether or not you'll be attacked. It's an issue of when. So we need to be able to prepare for that and say, regardless of the infrastructure and regardless of the various technical controls that we need to have other, what is the item that we call social technical controls in terms of aspects that pertain to insurance. Okay, in terms of the growth and the uptake, it is quite interesting because different surveys may be conflicting in terms of the actual numbers, but generally what we see is that there's actually a positive trend. And according to Alliance Global, the cyber market is growing by double-digit figures year on year and could reach about $20 billion or more in the next 20 years. So in the next 10 years. So again, what is trying to be shown is the aspect of the growth of the cyber insurance industry and the growth of people that are offering this service, growth of premiums, and people that are subscribing to this particular service. Second quote there is from Standard and Poor's Corporation. It says cyber insurance premiums, which now total about 5 billion, will receive 20 to 30% per year on average in the next future. So if you look at that 20 to 30%, being at that 5 billion, and you look at the first statistics that said may reach about 20 billion and more in the next 10 years, this seem to be in sync, and there's really a lot of growth in that market, and it's a space that insurers should really play in, and a space that companies should play in as well to provide some level of comfort, especially from cyber attacks. Bring it back to the context of Uganda, just to make it particular. There currently, from the research that I've looked at so far, there are currently only 2 insurance companies that are offering cyber insurance in this market, and that's Gold Star Insurance and one of the other insurance companies called Minet. These are from the Uganda market that have just tried or that are offering this particular service to people. There was I think that there was an uptake, and there was a plan to get into this by AIG in terms of the cyber edge, but then they quickly went out of the market, and they went out with that product. So right now, as it stands, there's Gold Star Insurance and there's Minet, and I haven't really gotten an appreciation of what they bring on board, but I've looked at Gold Star Insurances, I've looked at their website and looked at sorts of information that they do ask for. I've also looked at some documents and some publications and some thought leadership from Minet in that perspective as well. So again, that shows that in our market, the uptake ideally one by the insurance themselves is not yet big. It could be that the insurers feel that the people are actually not yet really there, and the people are not willing to take on this this new item and this new product, and they prefer to only come when they're sort of sure about the market. And for the ones that are actually offering the service, I'm yet to look at their numbers and see how that works out. But from previous research that has been done in 2019, clearly uptake in Uganda is still not up there. We are still not there. Our penetration, I think, is about, it was about 0.02%, which is really, really low in terms of uptake for the product. Again, finally, then policy discussions often assume that a wider adoption of cybersecurity will promote information security best practice. This is really a current, a very big area of research, and it's an area of research that I'm actually interested in, and it's an area of research that I'm working on together with the National Cybersecurity Center of the UK, trying to have discussions around, because there's this notion and there's this assumption that cybersecurity policy discussions, insurance policy discussions, assume that a really wider adoption of cyber insurance will promote information security practice. And the expectation and the assumption here is that when you look at cyber insurance as a product, before you get on to take on a product, there's some forms that you're supposed to fill in to ensure that your controls are up to date. So the theory and notion that really promotes information security best practice, because if you have sufficient controls, it's highly likely that your premiums will be lower than the premium of a company that is high risk, because the insurance provider feels that the controls are adequate and should be able to combat a cyber attack, as compared to one particular company that has very few controls, very limited controls, and that the insurer will feel, in their opinion, that this person is high risk, and this person therefore deserves a huge amount of premium. So a lot of discussion again around that space, and it's an active area of research. As I said, pursuing research in that space. I'm just trying to look at those the cyber insurance assessment forms and see, do they actually have all the controls in place? Do they actually try to enforce best practice? It's also a very interesting area of research in there as well. So in terms of how the product works, and the primary idea of this particular slide is for us to really get to have an understanding of what cyber insurance is and what we expect to get out of cyber insurance. So then how it works is interesting, because and the assumption that is in this this particular slide that you're seeing is that there's no broker in between. But ideally, for example, for some other markets, you'll find that there's a broker in between. But nonetheless, if there's a broker, we can still put that into the picture. The first step in terms of if you want to acquire a cyber insurance policy is you want to know, you make your intention on, yes, I would like to buy insurance for my company. And as I said initially, the second step is there's a self-assessment questionnaire that has quite a number of things that you're supposed to fill in. Do you have firewalls in place? Do you have network segmentation in place? Do you have antivirus in place? Do you have security policies? What is your what is your total revenue? What is your staff headcount? So there are quite a number of items you're supposed to fill in to confirm that your controls are adequate. And that is what the insurance provider uses to evaluate your cyber risk exposure. And if you look at number 3 or step 3, is where insurers then look at your responses and evaluate your cyber risk exposure for them to come up with a premium that they expect to charge, a premium they expect you to pay. So it's more of a questionnaire that just has controls that are expected in in any, you would say, in any data setting, and in any you say in any formal or in any organized company or firm. There's some controls that you would expect, and that is what then insurance providers will base on to determine a premium that you'll be required to pay. Then, of course, after having those discussions in terms of getting your exposure with the premium, of course, there'll be a lot of back and forth in terms of the negotiation. This is what we think the cyber exposure is, what we think the cyber risk is. this is what we think the premium should be. So there'll be a lot of discussions in that space to ensure that you actually come up with a premium, where something called a meeting of minds. Then we have a premium that everyone agrees on. Then if we get to that point, and that's the point where really we get to say, okay, fine, the policy is locked in, and then the client or the customer then gets to pay for that particular policy. It's the same. It's the same again. If there was a broker, if there were a broker in between, all then that needs to happen is that the client makes their intention known to the broker, and the broker then makes that intention known to the insurance provider. So that's the only thing that will change, is that instead of having that direct communication between the client and the insurance provider, there's an insurance broker in between who provides that sort of communication and negotiation. And the beauty with that is that the assumption, and in theory, is that what you call cyber, or not necessarily cyber, but any insurance broker, they have some sort of a relationship with insurance service providers, and they can be able to negotiate premiums that are lower than what you negotiate as an individual. Talk of it as a middleman, just someone trying to negotiate for an insurance. You come up with a figure that is that makes sense to you, that again also makes sense to the insurer as well. So that's the only thing that would change if there was a broker in between. So again, to this point, what you've covered, really, we've looked at the entire overview of cyber insurance, of what it is. I've looked at of its trend and its growth. I've looked at what is happening in the market, both the Uganda market and the external market. And then we've also looked at how then the process itself works in terms of what is expected in terms of the flow of the process. And so I think we've more or less covered what you call the overview and the foundations. And then we'll probably just want to look at, try to have a distinction between what you call traditional insurance or a traditional cyber policy, traditional insurance policy, and what a cyber insurance policy would cover. There are quite a number of things that are possible. The general liability insurance, that's what many people really have been confusing with cyber insurance, but we shall see that there's deviation. It's a very slight deviation between that. There's property insurance. There's E&O, which is errors and omissions. Then there's insurance as well. So if you look at more the column that speaks to general liability, most of the items are actually possible to be covered under general liability. But again, we say that although traditional insurance policies may offer the option to cover some specific areas related to cyber risk, and by these areas, as you can see, there's network security, there's privacy breach, there's media liability, quite a number of other things, damage to data, breach notification, regulatory investigation, quite a number of things. So we're saying although traditional insurance policies like general liability may give you the option to cover some of that risk, cyber insurance policies, on the other hand, provide a variety of coverage options and preconditions that need to be considered when purchasing cyber insurance. It's really big, and it can be ideally tailored to what you call a single organization. Let's say I want an insurance policy, I want a cyber insurance policy. That's why those assessment forms exist. And that's why we get to a point where we're trying to have discussion around what controls do you have, what is your exposure. So those can be tailored, and all these items, network security, privacy breach, extortion, and all of them, as you can see, are really covered under cyber insurance, but they're not covered under property insurance. Under errors and omissions, some may be covered if you opt for them. Under crime, the same applies to crime insurance and general liability insurance. That's why the plus is representing items that are possible. And for cyber, it's not whether or not it is possible, it is that these things are actually covered. And that will be really the difference between cyber insurance and the traditional insurance. In terms of success stories, in terms of things and items where we feel that cybersecurity or cybersecurity insurance or cyber insurance has come to the fore in terms of bringing and trying to reduce exposure and trying to reduce losses. We can look at three examples. One of them is we're all familiar with the target data breach of 2013. If you look at that, if you look at the numbers say that the gross expenses that were covered by targets during that data breach were about $252 million. But lucky for them, or good enough for them, is that they had insurance and they were able to have insurance cover about 90 million of that cost. And then the second will point to the Equifax breach. The Equifax breach, ideally, we are saying it came up to, the total came up to about $439 million, but $125 million of that was covered by insurance. You can see how insurance goes a large part in trying to determine, or in trying to reduce your loss, and what then you get in terms of coverage and in terms of what is paid back to you in terms of what you claim depends entirely on the sort of policy that you agree with the insurance service provider. Then finally, we're looking at the Sony attack, and here I wouldn't really bring out the numbers, but again, the key message that we wanted to bring out in this particular one is for us to try to get ideally numbers show that this particular vector or this particular breach reached up to about $100 million in terms of, I think there was computer repair, there was a replacement, and there were steps to prevent future attacks. And of course, there was some loss of productivity while operations were disrupted by the attack. But you can see the sort of confidence that the CEO had, because it says the costs associated with the attack will be completely covered with insurance and will not mean any more cost cutting after a few years of painful restructuring. So to put this into context, is Sony had undergone a lot of restructuring over time, trying to do some business process engineering, trying to restructure how they operate, trying to improve efficiencies, and then this attack then happened, and it had a very huge financial burden on them of about $100 million. And again, they had their cyber insurance cover, and for their particular one, actually, cyber insurance was able to cover for 100% of this because of the policy that they had negotiated. So 100% of the cost of this attack was covered. And if you look at the target of 2013, 90 is about, you could say, that's about slightly above 35%. Then if you look at Equifax, 125, that would be somewhat slightly in the range of 22% of that was covered by insurance. So as you can see, we're trying to get an understanding of these success stories in terms of how cyber insurance has helped to businesses to recover in terms of interruptions caused by cyber attacks. Bring it back to the context of Uganda, I think you could say, because one, it's something that is not to be hidden, that majority of the attacks that actually happen in environments, not necessarily in Uganda, but the entire business environment, don't get to see the light of day because of publicity and PR issues that may be caused by them. But as you can see, whether it's for Target, whether for Sony, whether for Equifax, these are things that came to the light of day because one, someone probably got to know of them and mentioned it immediately. For Equifax, it's the same. For Sony, it was really general knowledge, and everyone knew that. One thing probably you could say in our context, in the context of Uganda, probably you could look at the Pegasus incident that affected some of the financial institutions. Of course, you could say that probably someone would say that yes, the financial institution lost some monies due to that incident, but probably they're starting to have discussions, especially around cyber insurance, because you realize that the more the amounts involved in attacks increases, the more people begin getting interested to actually understand what is happening, what can we do to cover this, rather than if I lost 100 million, I would say, fine. That's not a lot of money. But if the numbers continue increasing, then we begin to see a lot of movement, a lot of discussions around that space. And these are the sorts of discussions that we want, or some sort of discussion that we expect to be happening, especially one, to grow the insurance market in Uganda. That's one, but also to really, from a risk perspective, for us to be in a position where we manage risk. And just not to dwell much on it, is that it's a risk management strategy in terms of risk transfer. Let's have that risk delivered to a third party, that's an insurance service provider, to cater for that. So again, we've seen the success stories. We've seen a lot of discussions in terms of the growth, in terms of what is happening in the market. Again, we've seen that cyber is a good thing. Cyber insurance is a good thing, and people need to take it up. But the challenge is that we also still see that there is a very low number in terms of uptake, and people actually, the number of people that are taking
Rodney, seem to have lost you. Yeah, we seemed to have lost the speaker. Let's just give him a few minutes to join back. Thank you.
Okay, let someone please confirm in the chat that you can hear me.
Yes, Hood, we can hear you loud and clear. Thank you.
These are problems that we have as a country, that we have one, we have a power that is not stable, and I don't know. I'll not say anything against the government, but there's quite a lot of things that for us that we need to look at, because I mean we can't really just as a country lose power. But anyway, we are back. Unfortunately, sorry for that. My router had to switch back to backup power after my power went off. So my apologies for that. So let me just so yeah, I should be having my screen back now, and that should be clear. Yeah, so we're looking at challenges with Uptake, and one of the primary issues, and we're saying that those statistics show that there's an increase in the uptake of cyber insurance. Many researchers actually do believe that it's really growing at a surprisingly, you would say, low pace, because the expectation is that
Hood, we are losing you again. Oh man. Okay. Sorry about that technical glitch. We'll give him a few minutes to kind of sort out the network issue, then he joins back. Sorry about that.
okay, sorry again. The same power just came back, and machine again, router had to boot again. Okay, so in terms of the challenges, one, I'll just try to rush through them because I expected that by 4 sharp, we just close this. So one of the challenges that we're looking at was in terms of data and availability. And again, from whether it's from a risk perspective and whether it's from business decision perspective, is that there has to be a lot of discussions, especially around data. we make business decisions. So unlike traditional insurance, there's not enough data in terms of what potential losses can happen from a cyber attack. What is the value of implementers? What's the probability of threat actors attacking? What's the probability that actually the controls that you have in place do not actually address the risk? So there's no data in terms of that, but also looking at data in terms of past attacks. What is there for insurers to rely on to be able to make a professional judgment and say, for this particular product, we expect this much. So that information is not there, and that data is unavailable. It's a challenge to the insurance service providers as well, but also it's a challenge to the clients or the potential clients of this. So there's no historical data on which you could say it's based on. If you look at traditional is used to derive what's the probability of an earthquake happening in Jan, what's the probability of a hailstorm happening in March. That data is there, and they can be able to look at that particular past data and try to come up with a decision on whether or not they feel that this is an issue of high probability. So there's that. Then secondly, there's what you're saying, which is called the beast called cyber. Cyber has now become very big. There are very many nuances that really complicate both the demand and on the supply sides again of cyber insurance, because cyber technology is ever evolving, and when technology evolves, the nature of attacks also evolves. If you look at the median number of days to detect an attacker's presence on a network has now also now increased. Before it was 146, but now if there's a report by Mandiat, the 2016 report, that has now reduced. Now it's region of 142 to 145. Attackers are becoming, attackers are using more advanced techniques. So cyber is this big thing that ideally one, insurers have no idea what it's about, and they can't really have an monies, or they can't place figures to it. And the same applies to the insured as well, or the potential insured. They also have a lot of issues, especially around that. But also look at the system. The cyber risk and compromise system may then also go ahead and compromise several other systems attack as well. It had an effect on target, but then it had an effect on quite a number of other providers that were really outside the frame of target. So it has far-reaching complications and far-reaching implications. So it is this one big thing that people don't actually understand, and people really fear to venture into it. Difficulties in quantification and impacting any difference, because again we looked at issues around data, but look at some questions that are key that's supposed to be answered in terms of setting the premium. Is how do you measure loss that will happen due to an attack? How do you distinguish between an attack related loss and other losses? Because some may have other losses, other business losses that are actually not cyber losses, or some may have other losses that have happened due to the attack, but they may not be captured. Or an attack may happen and it has far-reaching implications that actually that they can't be quantified. So people really feel that there's not something they should take up. In terms of, again, we will have discussion around cascading loss and having one incident affect quite a number of people and having that risk and that impact increasing. So there's also, how do you measure that sort of cascading impact? Again, if you look at Ashley Madison, for those that follow that Ashley Madison breach, there are actually things that actually led to loss of life. Then the question here is, how does cyber insurance cover for that? How does cyber insurance cater for issues for cascading losses and harm? How does it cater for that? And people have questions around that. And another difficulty in quantification will probably be what you say, loss of things that you saw intangibles. And by intangibles, you look at things like reputation, those are things that cannot be measured, the breach and the loss to intellectual property. And then it may be hard to measure that. Though someone from a financial perspective may argue that these are captured as IP in the financial statements, but we just need to have discussions around that as well, around the quantification of of IP. The third would be quite a number of things that are stopping companies or people from adopting something that a term that has been coiled as say the snake oil perception. And the snake oil perception is someone is going to think, okay, I mean, come on, I have traditional insurance, I have this particular insurance. In case any attack happened, won't I be covered? So it is the belief by organizations that existing policies actually cover cyber, as we had seen in the first graphs. We are trying to differentiate between traditional insurance and cyber insurance. There'll be quite a lot of discussion around that and trying to understand whether they do actually cover that. But many people actually do believe that due to the snake oil perception, that any other risk that they have or any other insurance that they have, actually that goes ahead to cover cyber risk, which may not necessarily be true. The fifth issue is what we are all familiar with, very, very basic in any environment, is that there'll be an issue of budget. Everyone will tell you, we don't have this money, we don't have this money, we don't have this money. So there may be several budgetary constraints. We make very little money, and we don't think we should invest in cyber insurance. That may be an angle, but there's also the other angle where a company actually makes so much money that an attack may not cost it. For example, if you spend about 250 million each year, $250 million, 0.35% of their actual annual expenses, 0.35%, and that is $250 million. So for such an enterprise, they would say, okay, fine, if there was an incident and we lost and been expected to be at $400 million, we feel limits, and we feel we can go on, we can take on that. But there's that as well. There are small companies that feel we make so little, we can't invest in this, and the big ones say we make so much that we don't really have to invest in it as well. But of course, at the end of the day, you need to look at issues that of the intangibles in terms of reputation and how that comes out to the public in terms of how you lose trust in the market. Then finally, then will be issues around some attacks not being covered, and this is probably maybe for you could say foreign companies, and look at espionage, especially. So majority of the cyber insurance policies actually don't cover for attacks that have been perpetrated by foreign agents. Those are often excluded from policies, and many people really have reservations around that. And what they're trying to ask is actually why don't we have this covered? And if we don't have them covered, why are we investing in this product as well? So the challenges again in the uptake from that perspective. Again, just as a summary, there's a lot of data unavailability. There's this very huge thing called cyber that no one understands. There are difficulties in quantification, which eventually impact on the premium, the snake oil perception, and budgetary considerations as well. And finally, then some attacks are not covered. So just to add on to this very briefly, is there a big because we are seeing that there's a growth in the industry, and there's a growth of people that on the product, but there are some trends in this particular cybersecurity and insurance. This is from more sophisticated. Is another problem, and is there enough money in this sector to cover for the needs? Because there are quite a number of people who want to invest in this product. The sort of losses that can come from these attacks are huge, and therefore those guys need to cover, those companies need to cover for that, for those losses. So the question is, do they actually have the money to cover for those losses? Yeah. So at the end of the day, again, what do companies do? Of course, they still have to invest in coverage. That is one, in cyber insurance. Again, as I said, help the market grow. That's one. But also at the end of the day, for them to actually look at their risk and mitigate it holistically, they need to look at having other ways to cover their potential exposure. Look at things like a self-insurance mechanisms that range from carrying additional capital to address future cyber attacks. Because what this does is you have a pool and say, this is more or less like our insurance. This is our money, and this money will only help if there's an attack. In case anything happens, we don't have to, and an insurance provider can only cover about 25%, but we have this pool from which you can draw and cover the remaining percentage. So there also has to be discussions, especially around that space, and being able to identify potential risk vectors and trying to cover for them in this particular perspective. Okay, really, I just try to make this brief and for us to have a very brief overview and of this particular product and this particular offering. And I'm hoping that we've been able to get at the bare minimum an understanding of cyber insurance and what is Uptake has faced over time and how those have been dealt with. And we've tried to look at the future of this industry and see where it's actually a bigger problem that needs to be addressed. But that's what I had prepared. I tried to make it brief, being that it's a holiday. I also have to get myself ready to go for mass. So I will welcome any questions from the team, and then I will respond to them. I saw quite a number in the chat, but unfortunately I can no longer see them since I went off and then rejoined later. I don't know whether Emily, Rita, or Pascal took note of those questions, but in case they didn't, and if your question has not been answered, please just drop it in the chat and I'll respond to it. Thank you.
Okay, thank you very much, Wood, for the wonderful presentation.
Okay, I've seen one here from an anonymous attendee.
Hello, Hood.
Policies cover this.
Hood, we can't hear you.
Go on, Emily.
Oh, okay.
Really?
Yeah, I couldn't hear you, but yeah, maybe there's some questions in the chat. I could start to, maybe we could just answer them chronologically, the way they came in. So, well, we do have one from Rita who was asking about, do we have cyber insurance services in Uganda? And then you share some examples on that. And maybe you could just do a next one from Dorothy Nalwada, says, how do we explain cyber to the institutions or companies that think it is not yet time for Uganda to go that direction, especially backups in the cloud and adopting online services than the physical equipments? Many non-technical managers have not yet thought of cyber attacks damaging the company into losses. Then she adds that they look at it as a very expensive path to take. So maybe, I don't know, you could respond to those. Then I go through the next three questions.
Okay, that's fine. I can take those, and I'll just respond to Dorothy's. But ideally, yes, because people just need to have an appreciation of cybersecurity, of cyber attacks, and that's why it's key that we have these sorts of discussion and try to create awareness and make sure that people actually do understand what cyber attacks and what cyber insurance is about. I do agree with her that yes, in terms of the uptake of many what you call non-traditional risk management strategies, there are quite a number of people who are really averse to those, because people still feel that of physical tape backups, and yet you can actually have a backup in the cloud. people don't want to invest in cyber insurance, and that's again a discussion that we had. But it's important that awareness then does happen, and also you realize that at times we learn the hard way, because we my personal, I've been preaching remote working from about 2017, and up to until COVID happened, no one actually saw that this thing can actually work. It's until COVID happened and people actually realized, oh, come on, people can actually sit home and work and deliver. So cybersecurity will change us, and that has been very clear. A very clear message put out by COVID. Many of us felt we can't work from home. How do people work? How are people productive? But people are actually working. So we shall learn the hard way if we don't learn to appreciate cyber now. But there needs to have there needs to be discussion, especially from what you say, top management, and setting that tone at the top, and ensuring that everyone at the top actually really goes in and understands what cyber attacks are, and what they can be, what they can bring on board. Because ideally, you need to have that sort of appreciation from the top for you to get that sort of funding. Maybe, and that is a very big problem for majority of us technical managers, is that we fail to explain things in a business perspective. I'll explain something to an MD, to a CEO. If I just explain to them and give them the technicalities of this, they will not support it. I need to learn to communicate to the board in a certain way that they do understand. Because if I go in and I'm only throwing numbers, I need a budget for this, I have a budget for this, I'm not giving them how that then ties into the business objective, then I'm actually doing nothing. So we have communication gaps, and there's really a need for us to have discussion, especially around communication between technical managers and non-technical decision makers. It's a decision that needs to happen. In terms of Rita's question, I think I did answer that. From what I've seen in the market, there's only Gold Star Insurance and Minet Insurance that are offering those two products. Actually, Rita, for your purpose, Minet is just in your neighborhood. It's like 5 or so minutes away from your office, so you can pass by and get a lot of more information in that space. But yes, they're the only two that are offering that. In terms of the Uptake, again, those numbers are not really being pushed out. I haven't seen numbers from IRA. I haven't seen numbers from these providers as well. So there's need to just have that uptake in terms of that particular product. Yes, Emily.
Thank you so much, Hood. I'll just take the next three, just do them in batches. Then we have one from an anonymous attendee who is saying, okay, it is advisable to recommend cyber insurance to be adopted for our organizations in Uganda today. What are the average costs for that? Then I think it could be the same person who is asking if existing traditional policies cover business continuity. Do insurers pay out for loss of business continuity, whether cyber or otherwise caused? Then the third one we have is from Olivia, who is saying that some insurers might require or encourage security controls to be in place so to reduce cost of insurance. Do some, perhaps smaller companies, think they cannot afford those controls, and so it is easier not to pay for insurance as it highlights internal weaknesses? Hood? Hood? Hood, can you hear me?
I'll respond. I can hear you. You can't
Okay.
hear. I can hear you. You can't hear me.
Yes, I can. Well, I'm done with that batch. Then I do have another batch of about three
No,
or so questions.
that's fine. I can. Yeah, I can take those three. In terms of Olivia's question on whether some insurance says might require or encourage controls to be in place to reduce the cost of insurance. Smaller companies think they can't afford. I think this is again a discussion that we had, because for you to have a lower premium, that is one, is that you need to have specific, you need to have some level of control in your environment to reduce your cyber exposure. For instance, think along the lines of, we don't have the money to implement the controls, then it comes back to bite them, because at the end of the day, they're going to have a higher premium because they don't have controls implemented. And then rather they do implement controls, and they have some mitigation plans. And again, as I said, it's an interesting area of research that we're actually looking at, is trying to understand whether actually cyber insurance reduces um, reduces cyber risk, because whether or not it actually encourages controls, because the assumption is that people want to implement controls so that they have lower premiums. So the active area of research is for us to really go in and say, okay, fine, is it actually happening? Is it that people actually saying that, okay, fine, I'm going to buy insurance, I need very low amounts of insurance premium, I need to implement controls. So again, as I said, it's just for you to get the right balance, because you may find that you're not implementing controls, but then at the end of the day, you're paying higher insurance premium. Yet actually, if you actually did implement the controls, you'll have lower premiums to pay. So hopefully that does answer, Olivia, your question. The first one, Emily. But the second one is in terms of having, if traditional policies cover business continuity, the insurance pay out for loss of business continuity, where cyber or otherwise caused. Again, it depends on. No, I remember the first question. Actually, I'll just answer it together with this one. The first question was in terms of the average cost. So I'm going
Costs,
to tie
yes.
this together.
Okay.
Is that for you to be able to have for you to be able to get premium, or for you to be able to have a premium charged to you, you need to be able to show that you actually have necessary controls in place. And the amount that you don't necessarily charge, that will be to someone else. So there are quite a number of things that you need to tie in before you actually have the premium. One is the size of bringing in, how much they're bringing in. Three is in terms of the controls that they do have in place. And four, then finally, in terms of the size, you can't really say that there's an average fee. An average premium per se, but it just entirely very important, depends on the complexity of your environment. And then in terms of whether insurance pay out for loss of business continuity, yes, and that will be actually be covered, especially under business interruption. If the policy negotiate actually does cover for business interruption, then that's the insurance term for business continuity. There has been an interruption, you can't have operations, and you need to be able to continue operation. And yes, that is covered under the traditional cyber uh, policies. But I think your question, to be particular, was looking at if traditional policies cover the business continuity, the insurers pay out for loss of continuity. This again, now this now moves to the discussion of having that clear line between traditional insurance and cyber insurance. If the policy ideally covers business interruption, as I shared earlier, if you look at there was one visual where I was trying to distinguish between the two. If the policy actually covers business interruption, that will be paid for, whether you have a cyber policy or not. But there are specific aspects that are cyber related that will not be covered in those traditional policies. I hope that that answers it as well.
Okay, thank you. Thank you, Hood. We do have a question from Charles, who is saying that his institution has electronic and computer fraud cover under UAP. Should they perceive this as cyber insurance, or they need to detail it more under the cover to explicitly include the known cyber crimes and other components around it? That is from Charles. Then we have another question from Haman, who is saying that if a company is not willing to pay premium for an attack from another country, do we see cyber insurance making baby steps in Uganda? Okay, then we have another one from Sharon, who is saying, for communication about insurance, I advise that we can start by making internal evaluations, after which propose invitation of external parties such that management and other stakeholders can buy in. Okay, that's her opinion about it. Thank you, Sharon. Then Olivia says she agrees the importance of cyber insurance is more about putting in place controls rather than paying out. So the last one we have is from David Kawaida, who is asking any recommended publications on cyber insurance that you could point us to. So over to you, Hood.
Okay, thank you for those questions, and thank you, Emily. In terms of Charles's question, and I point to the fact that they do have electronic and computer fraud cover and the UAP, and should that be perceived? That should that be perceived under cyber insurance? Well, yes and no, because one, electronic and computer fraud will be a part of the aspects that will be covered under an actual cyber insurance policy. But if you look at what you have now, it is specific to that particular product and that particular element of fraud. So if you look at aspects, I'm sure aspects pertaining to ransomware, aspects pertaining to corporate espionage, aspects pertaining to I could say hacking will not be things that will not be covered under this particular policy. So yes and no, because one, electronic and computer fraud is part of what you consider as element that will be in a cyber insurance policy, but it's not comprehensive. Then give it the full cycle or the full coverage of cyber risk. So I would want not to actually call it cyber insurance. So it is that particular cover that you went for. But again, it doesn't necessarily have to be called cyber insurance. It may be called another name, but when actually under cyber insurance. So it is paramount that when you're looking at and when you're trying to negotiate that policy, you need to look at activities or losses that are actually covered by that particular policy. So those are really important discussions for you to have and get what is actually covered by this particular policy, because it may have a different name, but when it actually covers the elements of very many elements of cyber crime. That's for Charles's question. For Herman's question, I think Herman's question was around if a company is not, I think if the company is not willing to pay premium, do something about baby steps. So in terms of if because again, how these things are structured ideally is insurance providers don't want to have insurance providers don't want to have, you could say, huge avenue of risk. They want to look at things that are actually manageable by them. They want to manage certain particular aspects. So if a company is not willing to pay premium, and most of the insurance companies actually are not willing to, I'm not sure whether Herman meant premium, but I'm trying to understand the question. Is that what was trying to ask? If someone made a claim and that attack came from another country, then most insurance providers are not willing to provide for that. Some of those services are not covered because they'll tell you cyber is this very huge thing. Attacks can come from anywhere, so we don't want to expose our risk. But of course, there are a lot of other insurance providers that actually are willing to take on that. And they say for us, we're getting an attack, regardless of where it is coming from, whether it's coming from Uganda, whether it's coming from Israel. We are going to, if you claim, and there was actually something that happened due to that particular attack, regardless of where it came from, we don't want to know. We are going to do that. And insurance providers actually go in and help you in terms of the forensics, in terms of the investigation, in terms of incident response, in terms of communication, quite a number of things really that they can do. And the comprehensive police will actually have that, and they will even come in and do PR for you in case the issues around, especially issues around reputation damage. So it's very important for us to have discussions in that space as well. And one thing that is key is it's a new thing. So We just need to understand what we're getting into. We need to understand the policy that we are buying. We need to understand what exactly that we think will be covered in this particular item that we are trying to buy. And then David says, are there any recommended publication on cyber insurance that you could point out to? Very, very, very important question. And yes, there are several publications, and if I'll share the slides. There are quite a number of references in there that I've put in there, and I say that strongly because it's an area of research for me, especially one for my master thesis, but also it's also a project that I'm working on funded by the UK government around cyber insurance. So there's really quite a lot of material out there that you can look at and be able to get an appreciation or gain an appreciation of what cyber insurance is, and of what really we should get out of it. Then there's a question from Sam. Isn't Minet an insurance broker? But yes, they can lead you to the insurer. Yes, I agree. And again, in terms of the discussion that we had, is when trying to procure cyber insurance, you can either decide to speak directly to the insurance company or the insurance service provider and have that communication directly with them, or you can decide to speak to an insurance broker who will then lead you to someone that can actually provide the service. And why we say that is that we had said in terms of the discussions, you may find uh, brokers have relationships and they can be able to negotiate better fees than what you negotiate yourself as if you went in as an individual rather than going in with a broker who understands the industry and who has sort of relationships with people in that industry and can be able to negotiate better premiums. Hope I've answered that one as well. Are there any other, Emily?
Thank you, Hood. Looking at the chat, I think that is all that we had. Yeah, thank you so much. Maybe at this juncture, I would like to thank all. Thank you, Hood, first for the great presentation. You've really, brought to light. Okay, shed more light on this topic of cyber insurance, and I know all of us have learned a lot. And when the discussions come, I think we would be adding a lot of value on the next big topic. I would like to, at this point, thank you all for attending. I would like to recognize the board members that we have on this call. We have our president, Glory Ninsima, our chapter secretary, Rita Kobsinge, Alan Mutavazi, the academic relations director, and also Samari Kachivade, who is our IT governance director, and also the She Leads liaison for the chapter. Well, I would like to encourage all the members to subscribe to our social media channels just to get updates on the events that will be coming on. We do have maybe just a highlight. We do have our next webinar on the 30th of this month, which is a collaboration between the Africa and South America regions, and it will be hosted by ISACA Kampala in collaboration with Medellin chapter in Colombia, and the topic will be on information security governance. Then we do have another one on the 13th of May on IT auditing. Yes, so you can always look out for that. Check out our website. There's always a lot of information that is shared therein. That's about it. Maybe Hood, if you do have some closing remarks, there's some parting shots, then we can close.
Okay. Okay, yeah, sure. Thank you. And just again, even before I share the presentation, I've been able to put some links in the chat for those who requested for material, and I also be able to share some research papers whenever they see there's quite some material from Deloitte, there's some material from the project that I'm currently working on therein as well. And then there's some material also from more the Wall Street Journal. So you should be able to go through that. Otherwise, again, I thank you for your time and for making it for this session. It's always good for us to learn and also get to appreciate the new discussions that are coming on board. So it's important that we have these sorts of discussion. Otherwise, I thank you for your time, and very glad that we've actually kept time and we're going to finish on time, and we actually started on time, which is really good. Otherwise, thank you so very much, and enjoy your holiday, uh, the long one, and be able to make the best out of it. Otherwise, for myself, it's a goodbye, and thank you for the pleasure of your time.
Okay, thank you, Hood. Maybe just a small one. The members, you can check out our chapter website for our bylaws, which we've updated there, just to get more information about the chapter. Thank you so much, and happy Easter to everyone. Bye.